Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 23rd, and it is pretty ugly out there this morning. I came in and I looked at the S&P 500 and I was like, oh yeah, doesn't look very good. So coming over to the volume profile here and the E-mini, you can see, so yesterday we made a pretty good recovery, and then later in the day it just so and this is really, I think, related to the 10-year treasury here, where they did, you know, the rates dropped yesterday after comments from the ECB, but then later in the day they kind of came back, and so as they came back, the S&P 500 did as well. And now here in the overnight, a pretty solid push down takes us all the way back, retracing these single prints from the move that we had on the 4th. And so now there's still the 40 areas, so it's good that they bounced where they did. But if they have another push down and we start getting into the 3820, 3800 area, we start to get into where the last downturn was. And yeah, that's not a good thing. So that's kind of what we're looking at right now. When we come over into the commodities complex, though, well, oil is doing pretty good. And I think, you know, the supply that's coming from Texas, not, constrained. It's constrained, and then the demand is increasing, and so oil is still looking pretty good, and all of the analyst estimates still have it going up. Gold, of course, gold and silver did really well yesterday, pulling back just a little bit today, but still looking great, especially silver, man. It's just, that chart just is beautiful. Copper, as always, doing okay. I mean, it's back a little bit, but it's doing okay. And the dollar rising just a tad from this volatility that we're getting. And I just want to point out, I should go back here a little bit, and, just pointing out that the NASDAQ in particular, like, really got hit hard. So here's the E-mini, look at the NASDAQ and it's like, oof, ow, it's bad. And then let's come back over here to the stocks, and you can see in the pre-market, MSTR down 7.19%, Sumo Logic negative 4.36%, Apple down negative 2%, and Tesla down 5.15%. I think we're going to switch this right here from GameStop to Tesla today, because they are just, and when you look at like the run that they've had from the top, I mean, they were at 800 and they're touching 650 overnight. It is ugly in in Tesla. So that's basically what we're looking at here. Now we do get some news today, right? Let's see here. Well, we're no 620 news, but we get Case-Shiller House Price Index, and Chairman Powell will be speaking at 10 o'clock Eastern time today. We also get the Richmond Fed Manufacturing Index. I just want to note that the opening statements from Powell are already out, I believe. So, John Cavazos, welcome. What is your take on GameStop now that some time has passed? I believe that the short squeeze is over. The data clearly shows that the squeeze has squoze, and therefore the trade is no longer interesting. I am noting there has been some bullishness over there past day or two. It seems that the investors really liked that Kitty, Raging Kitty, has bought more and still thinks that it's attractive at this price. I don't get how that could be the case, but hey, it sounds like GameStop is planning big things, so who knows? But value investing is not necessarily my specialty, so I will leave it up to those people who value stocks to show us what it should be properly valued, right? I mentioned a few weeks ago about a feedback loop between BTC and Tesla, and in turn the NASDAQ think this is it. Well, so we've been monitoring that closely. I have not, so Bitcoin took it on the, oh my gosh, I'm still like digesting my food. Okay, so, oh my gosh, I didn't even notice that Bitcoin got pummeled overnight. Okay, so this move in Bitcoin yesterday, that was just this, and it retraced very aggressively. I did not notice the indexes or NASDAQ or any of that specifically going down in correlation with Bitcoin. So if there is a reaction, it is delayed. In that kind of a situation, it's very difficult for me to prove that they're, that cause and effect, essentially, right? The best we can do is look at it and see what the correlation is and see how it's working out, So it could be. I would also note that let's go to CNBC, because there was a story about this on the CNBC news page here. Where was it? It might not be on here anymore. But there was an analyst. He was bullish on Tesla, but he was warning that they've become tied together, and that Bitcoin could end up. Oh, here it is right here. It's actually the latest news. Yeah. Daniel Ives, an analyst at Wedbush, said Elon Musk and Tesla are now tied to the Bitcoin story. So we're not the only person. We're not the only people thinking that this could be a thing. And, immediately when it happened, that was my very first thought. You remember that stream. I was like, man, you do not want Tesla to start moving to Bitcoin, because Bitcoin is severely overbought and is probably going to crash 80% this year. And what is that going to happen to Tesla at that point? And I don't think that it's a significant part of the market cap, so it shouldn't have that drastic of an effect on Tesla. But the problem with Tesla is that it's kind of overbought too. So here you have this situation. Bitcoin is down. Tesla is down. I'm not entirely sure if that's really what's pushing it, but kind of sucks. And yeah, it really looks like the trade right now is to be short the NASDAQ, right? Yeah, I'm happy I sold your Bitcoin and I was short. Really? What did you sell at, Will? Each on its own has the ability to pull the market back significantly. Tesla, Bitcoin. It's possible. I guess my point with this sort of a thing is that when I look at the amount of Bitcoin that they've actually bought in comparison to everything else that's going on in the stock, it's probably a sideshow. But there's a very significant psychological factor to it, isn't there? Oh, you got 46,000, so that's not too bad. Yeah, so it's just like, if this is really what's going on, I think that it's all sentiment. But that's okay. I mean, that doesn't diminish that a move could be really big, right? Because it was sentiment that got them there in the first place, wouldn't you say? Right. I was watching. I wish I could remember what this guy's name is on TikTok because I like him. His big thing is he shows you stuff in the Bloomberg terminal. He trades primarily off of a Bloomberg terminal. And he was saying, like the popularity contest was the thing in 2020, but you can't just rely on that anymore. You have to work for your money now. And I think that it's absolutely true. And so I'm not necessarily looking for this market downturn to, take us back to the pandemic lows or result in like a huge crash or anything like that. But a 10 to 20% decline would be standard. And for them to, decline pretty significantly in March and maybe struggle all summer would be pretty common action, wouldn't you say? I mean, I've seen that in many years. And, Speaking of psychology, I read that traders buy and sell on round numbers. Does this mean that we could look for the odd numbers like 1033? Well, so I've done some study on this, and I have found that in the futures that if there is any price that they are likely to turn around at, it's 13. There's a slight aversion to 13 in ZB. But other than that, I haven't found any direct edge just going off of the number itself. So I would say that even though that is definitely a thing in equities, that for us, there's not really a whole lot we can take from it. But you are thinking along the right lines. I think it's just that particular effect isn't strong enough to overcome just the natural noise of the market, right? BTC is still in a toddler stage, though. Thoughts? I think that Bitcoin will ultimately be worth nothing. I know, shocking, and I'm sure that if you're a really big Bitcoin proponent, that would be like, oh, I'm not gonna watch this guy. But let me explain, okay? Bitcoin requires a significant amount of computing power to run. It's a huge waste of energy. And it's not very effective at the job that it does. It takes 10 minutes for your transaction to process. And that is if you get in the next block, which right now, not everybody is getting transacted. You have to put on a big fee in order to ensure that you're going to be put in the next block. And this is because Bitcoin Core has intentionally what is the word? Crippled. They have intentionally crippled their own cryptocurrency so that they can make more money from the mining. They want to mine and make money off of the fees. And this ends up creating this issue where they can't transact everybody, right? And then you add on top of that the real value of a currency is your ability to use it. Right? If you can't actually use it to buy something, it's just not worth anything. Speculation only gets you so far, guys. And because of this issue, retailers have not been picking up Bitcoin. They've not been using it. In fact, Bitcoin Cash at this point, I believe, gets used more. And they're pushing through a ton of transactions, and they can increase the block size, so they almost always clear their memory pool, right? So the issue is that eventually one of these other cryptocurrencies or technology is going to overtake Bitcoin. And once you've done that, you have eliminated half of the argument for Bitcoin, right? You've eliminated half the argument for Bitcoin, which is that, the technology, because there are other coins that are superior, and there will be coins that are superior that are run by nations. And that brings you to issue number 2, which is that, so then you say, well, what I really want is I want a currency that is not run by a nation state. Well, I don't think that you actually want that. I don't think that you actually want that because, Well, it's a coin like Bitcoin is inflationary. So the United States used to have their currency based on the dollar. And do you know what happened when their currency was based on the dollar? Every 5 years, there would be a market crash. Not just like a 10, 20% pullback, but like, a market crash on par with the 2008 crisis. And it wasn't until the Federal Reserve came in and we implemented, monetary policy and interest rates and decoupled the dollar from the gold standard that America was able to see something that was, anything even remotely close to stability, right? So that's where I think that really in Bitcoin, the value proposition in it at this point becomes speculation. And you can see that in the way that Bitcoin acts. People say hodl, and you of course you'll get a really big pullback, but if you just hold it, it will go higher. But when you look at the actual stats, the majority of people do not. The majority of people do not hold it. They are speculating. And in a speculation bubble, like we have seen, the way that the math is, if you look at the square power law, the square root law of market impact, basically results in 80% of people getting in at the top, and then they all get dumped on. So that's why I think that eventually Bitcoin will be worth nothing. Now, well, maybe not nothing, but close to nothing, right? Now, it might be a really long time before that happens. So in the meantime, you can certainly play it. But then that brings me to point number 3, which is that I have developed a system for valuing Bitcoin and for quantifying how much speculation is in there compared to the price, and using that and, past behavior to identify when Bitcoin is in a bubble and is likely to crash. Now, this last run has been different. It should have crashed a month ago. When Elon Musk came in and started tweeting about it, it saved it. It's, because otherwise, in the other situations, at least, based on the history, at least, it would have crashed. So what's going on right now is different. But I would still say that based on the model, that an 80% decline is inevitable. It's just a question of when. When do they get it through? When do you push price down low enough that it's an issue? Well, here at 4,500 in Bitcoin, they are right on the edge, man. They are right on the edge. And if this has another downturn today during the main market, I would look out below. Yeah. Public space. A couple of new guys, I guess, putting Tesla in the ticker attracts a couple of people. So welcome. And I guess for you new guys, I should just go through really quickly. Well, this isn't too many new people. Then normally we peak at around 50 viewers, but that doesn't happen until the market opens. So it's a lot of people for this early. So let me just really quickly here give you a rundown of what you're looking at, right? Oh my gosh, why didn't I? Yeah, there we go. Okay. So what you're looking at, I have a depth of market for a couple of different markets here. You can kind of see the window right there, right? So this is the 5, the 10, and the 30-year bonds. We need to look at all of them so that we can see what the curve is doing and, monitor liquidity and how they're affecting each other. Because you might see a situation where there's not liquidity in this one, but there's liquidity in this one. And so you can kind of imply that there's a liquidity in this one because of spreading activity and so forth, right? And then these two are ES. These are S&Ps. S&P 500, right? And these are mini and micro. So we watch the mini because we want to see the order flow in the mini, but we execute over here in the micro, right? And then down here, I just have a really cool chart because it looks cool. Has a lot of level 2 information going on. I do have robots that trade off of some of this information, but it's on another page. By the way, I'm doing my experiment. And let's see here. Which ones took? Min and both took it. Okay. So I'm trying I tried my level 2 indicator yesterday, and it worked really, really well. So now I'm looking at it like, okay, well, there's a couple of different ways that I can look at this. So let's just try all of these strategies. So I have 8 different level 2 strategies that I am taking, and we'll see how they turn out. 4 of them I expect will not do very well, but we'll see. We'll see. Really, Jay, you've watched me trade bonds for years before you did live bids. So then you were one of the guys that from the very beginning came across me from futures.io 4 years ago. Oh yeah, now that I think about it, your name seems kind of familiar. Yeah, going back to that, I always surprised that so many people came in and started watching from the very beginning. I really am lucky in that respect. The funny thing is there's been a lot of people that have started a lot later than me and have become a lot more popular than me. And, there are certain things that they do that make them popular that I don't want to do. So that's okay. And I don't necessarily want to be popular. Well, I do and I don't. I do and I don't. I would like the channel to have, 100,000 subscribers, but I wouldn't necessarily want, 5,000 people watching me every day on the live stream. Once we start to get over, let's say 250 people watching live, it starts to become a problem. So, yeah, hit that like button. Thank you very much, William. Let's see here. Was there any other questions I missed? Who's coming back here? Oh, you mentioned Cardano. I'm not super familiar with Cardano, and it's kind of on my list of I need to investigate more. But my recollection is that Cardano will be based off of staking. And I am personally not convinced that staking really fixes the problems. In fact, I kind of feel that staking is premised on some of the same fallacies that are ruining Bitcoin. Primarily that the people that own it really just want people to hold it forever because they think that if everybody holds, that price will go up. And they don't realize that the power you get from people actually using the currency is so much bigger. Like seriously, if Bitcoin had been scalable from the very beginning and there was never this block size issue or any of that sort of stuff, it would be worth so much more. Like the 2017, it would have gone higher in 2017. And I actually think also that it might not have gone as low. Uzi says still here quieter these days though. Yeah, Uzi's been around from the beginning too. Well, from the beginning of streaming at least. You have been quieter. That's okay, Uzi, but I think about you a lot actually, because honestly, the YouTube chat is only a thing because of you. Like straight up. Before it used to be like I had both open and I mostly watched the Discord because we had a good group of people in Discord. I don't, watch Discord as much these days, but Uzi was the one that started talking a lot in the live chat and made it active and more active than the Discord, frankly. Kevin Wimmer and bots. Yeah, I haven't seen Kevin in a while. He changed his name though. And I'm trying to remember what he changed his name to. He has been around, but not as much. Oh wait, he is there. Oh, I thought you changed your name. No, he did change his name at one point. Who were the longest watchers? I still remember Uzi Ace Win and forgot the last name from the guy you always argued with. Oh, well, there was Sunday Driver we argued with a lot. Hasn't been around as much. I kind of, after the election, Sunday Driver kind of lost interest because I wasn't talking about that political stuff as much. Funny enough, Ace is actually kind of more of a new member. Relatively speaking, I think Win came along before Ace, didn't she? Yeah, definitely she did. And but no, Uzi came in after we started streaming by a few months, but in YouTube chat, he was the first one to start talking. So if anybody gets to claim the mantle of like old school, it's probably him. Even though I know that there was a good 100, 200 people that have been watching from the very beginning. I became more of a quiet watcher watching on tablet. If there are no Dota streams. That's funny. I find it interesting when I go to Twitch, because I used to think, oh, there's so many games and then the landscape is changing all the time. But now I go over and I look at Twitch and it feels like it's the same thing all the time. I feel like it's the same games, and League of Legends and Dota just do well. They're always doing well for some reason. Public space. Is there a reason that you're not trading the mini NQ? Yeah, so actually there is. There's a very good reason for why I don't trade the mini NQ. So first of all, the mini NQ is just a lot more volatile. And I'm really quite risk averse. You notice when I'm trading, I don't trade my live account all the time. And when I do trade my live account, I try not to take very much risk, because I know that I have a tendency to like go way overboard and put too much risk on and have a really bad day all of a sudden. So I try to limit the amount of risk that I take. And that's also why, I usually am only trading a few contracts, like 1 to 3 contracts. But then the other issue in NQ is that there's really not a lot of liquidity. And for me to do what I do, having the liquidity is a really big advantage. The more liquidity there is, the more time it gives me as a human to try and make a call, and the easier it is for me to read. Because when I'm over here in the E-mini or in the treasuries and I see it goes down, it goes down, it goes down, it goes down, and it's only like 10 contracts trading every time, like that stands out. In the NQ, you can't really do that, because it's like there's like one contract at every price anyways. You know what I mean? So I know that a lot of people are attracted to the NQ initially because you can make more per contract, essentially. Like the amount of leverage that you essentially get with NQ is higher. But I don't perceive that as a benefit. I've seen more people blow out on NQ than anything else. I need to blow my nose here. Hold on a second. I mean, don't get me wrong. Most traders on ES will blow their accounts too. But when I look at NQ, that's where I get like the really bad stories where some freak accident seems to destroy them in in 5 minutes. And it's like, I like mini NQ for range days like yesterday. Okay. Well, I definitely understand why a lot of people say, hate things like treasuries that are really thick and you have to wait in line, because, being at the end of the queue is not fun, and it's a disadvantage. That's what I was always telling you, Seth, when you said CL was the devil, NQ is far worse. NQ is, yeah. Well, the difference between NQ and CL, I think, is that even though NQ is like the account killer, the way that it behaves is very, it's like an index. So it's very much like what the E-mini does. And if you understand the way that the E-mini moves, you kind of understand the way that the NQ moves. And there's some degree of consistency with that because it's an index. It's really interesting. I need to go and do some more. We should do some research because it seems to me that there are behaviors that you see in index. Index behavior. I don't know how to search for it, but surely somebody has done research on how indexes behave compared to commodities or something like that, right? But oil, though, the thing about oil, and the thing that the reason why I pick out oil in particular is that oil has this split personality. Like, oil will make you think that you're the best trader in the world. You'll catch a runner and you'll have this time period, like a week or more, where it's like you just can't lose and you just win all the time. And then all of a sudden, it will just absolutely destroy you. It's really something else, and I started on oil, and that was kind of the thing. I was like, I thought that I understood it, and then all of a sudden it was like the behavior would completely change, and you're like, what the heck? And that's where I feel like it almost lures you. I kind of feel like that there are predatory algorithms out there. I don't think that it's as common of a thing in the S&P 500, but it seems to me that what somebody will do is they'll be a market maker and they'll program their algorithm to work in a specific way to train the markets to react to it. And then once they have data that shows that the market is reacting to it, they change the algorithm and have it start doing something different. And that's when they execute their big trade, So it's like they condition the markets for days or weeks so that they can do something. And I think that happens in oil. This is just a crazy conspiracy theory of mine, but I mean, I think it makes sense. Feast of famine with oil, my buddy trades in can testify, yeah. It really is like, the Sharpe ratio that you get with it isn't very good. You get good runs, but your Sharpe ratio isn't very good. This is kind of what attracts me to treasuries. If you really understand what's going on in the market, and I don't necessarily think that I always do, I think that there is a lot of information that you can get about treasuries that maybe there's some news website out there that I don't know about yet, or a squawk that I can get that's better on the treasury sort of stuff. But I think that if you understand the market and all of the things that are going into that market, including, corporate bond offerings, that you can get a lot of consistency in the 10-year treasury. And you can get a very high Sharpe ratio in the treasury. So that's kind of why I started with that. But now I mostly trade the mini ES because I think that the mini ES, provides me the least risk. And the timing of you saying I find very interesting with my perspective of this big move. Yeah. Well, so just as an example, I was kind of saying in chat the other day in Discord, on the metals Discord, like silver has been looking good. It was looking good all week, but it was really looking good, yesterday. And it seems to me like, why didn't they do the move that they had yesterday on Friday? It's not like the dollar wasn't weak that day. But then it was like, well, last Friday was options expiration. So it was kind of like they waited until the options expiration to make their big move, you know? Yeah. And now, I mean, the options is the thing that the options can cause that sort of thing from happening unintentionally, you know? So, well, that wasn't too useful. So I've got like my 8 robots going, and so here was my original from yesterday. Took that one, and the other ones didn't. But then I got a bunch of them took this one. And then a bunch of them took this one. These ones actually made their money first, and then these ones made their target. So everybody, all of them made money because they're using a long stop. I might need to go back and have them run with equal risk reward to do this comparison. We'll see what the stats say at the end of the day. If there's differences, we'll know in 2 hours. Okay, a stable coin. Wait, what is this? Tether had no access to banking anywhere in the world, and so for periods of time held no reserves to back tethers in circulation at the rate of $1 for every tether, contrary to its representations, in the face of persistent questions about whether the company actually held sufficient funds. Tether published a self-proclaimed verification of its cash reserves in 2017 that it characterized as a good faith effort on our behalf to provide an interim analysis of our cash position. In reality, however, the cash ostensibly backing Tethers had only been placed in Tether's account as of the very morning of the company's verification. Wait, this is a New York Attorney General press release. February 23rd. Oh, this is maybe why Bitcoin is already down. Whoa. Okay, so this is not what I expected, though. An investigation by the Office of the Attorney General found that Ifinex, the operator of Bitfinex, and Tether made false statements about the backing of the Tether stablecoin, and about the movement of hundreds of millions of dollars between the two companies to cover up the truth about massive losses by Bitfinex. An agreement with Ifinex, Tether, and their related entities will require them to cease any further trading activity with New Yorkers, as well as force the companies to pay $18.5 million in penalties, in addition to requiring a number of steps to increase transparency. This is new. This was today. I would watch IBB Sucks. I don't know what that is. Okay. The OAG's investigation found that starting no later than mid-2017, Tether had access to no banking anywhere in the world. And so for periods of time held no reserves. So all of this time when they were printing money in 2017, they didn't even have access to banking? Wow. What is this new? Let me post the link. The news source is the New York Attorney General themselves. So this is on the New York Attorney General website, and this is their press release that I am reading. When no bank backs you, turn to shady entities. Bitfinex hid massive losses. So essentially, this whole theory that I've had this whole time, that I was looking in my indicator and saying this looks like what's happening, was true. That they lost a ton of money and they just printed Tether to make it up. Oh my gosh. So, this is so interesting, though. It is not the way that I expected it to come out, because I expected it to come out as the New York Attorney General would come out and say that Tether was not backed, and that the whole market would just like instantly collapse, right? But this does not necessarily make Tether collapse, right? It will dramatically affect the price of Bitcoin. In fact, I would say that 50,000 here is a good sell. 50,000 here is a good sell, because there have been hedge funds and people in New York that have been working with Tether and doing things in the markets, pumping it and so forth. And those people aren't going to be able to do that anymore. They're going to have to find a different way to get into the market. And they're not going to be able to use margin, because they've been using Tether for margin. But it's not going to stop Tether from printing. So they could still print, and you could still trade the Tether on Bitfinex or these other exchanges. It's just that you couldn't be a U.S. entity, right? You couldn't be a U.S. hedge fund, but anybody else in the world would be fine. So it doesn't destroy Tether right away, but it is very bearish. This is so interesting. Please help me explain why Tesla's dying right now. I bought in last week. Oh, jeez. Well, so first of all, like, never all your money in something. Never all in. No. I mean, I know there's all the memes and everything. They're joking. I'm very serious, and I'm very risk averse. I would recommend, if you have $10,000 or more to invest, $5,000 to $10,000 to invest, and you're not going to do it in a tax sheltered account like an IRA or whatever, right? You're already fully funding your IRA and 401k, okay? And you want to get into some stocks, then you should pick 5 companies, and they should all be in different sectors, okay? So that you don't get completely creamed all at once on one thing, okay? So anyways, why is Tesla falling? Well, so first of all, Tesla has been on like a crazy run, and a lot of people were saying that it was overbought at prices like 50% down from where it is right now. So, that alone is kind of like, there's going to be some pullbacks, right? Now everybody says, oh, well, Bitcoin isn't a real company, and there's all these big things that are going to come through, and I don't know, we'll see. But it was a sentiment-based thing, and what has happened in the last week is that the sentiment has really changed. Like every major analyst, so even, oh my gosh, like even the guys on YouTube, okay? Like, let's see if I can see any on here, like, oh my gosh, I can't even remember any people's names or anything. Well, yeah, like even Graham Stephan is picked up on that, because he's always like eternally bullish, right? And he basically doesn't encourage people to try and hedge against like a downturn. But he's been seeing everything that the analysts have been saying, because all of the bank analysts have been saying that. Yeah. So has your MSTR bet paid off? So I don't think that it was a bad bet, but yeah, it didn't work out. So if you look at MSTR now, the thing is that if I was able to put up the capital to buy at the money puts, and I had put them out to March or April, then they would really be paying off right now, right? Because if we come down here, we can look at them actually. So if we go to, so right now at 870, you're paying $10,000 for a put, right? But if we come up to 1,000, they're almost 20. So you would have already made double your money on this downturn. So, but for me, you coming back over here and you're looking at these ones that are like the cheapest ones. Yeah, it's not, I mean, you could buy, well, And then the issue is that you have to buy. So like for $110, 270s might work out because Bitcoin doesn't have to drop that far for MSTR to be royally screwed, right? But I've decided that MSTR is just too rich for me to take advantage of. So all I can do is say, well, I told you so, but you know. Anyways, back to the Bitfinex thing. Let's see what the Bitcoin guys are saying. So that is bearish. Clearly people knew. Yesterday must have known. Okay, so it's been an hour since they posted that on that subreddit, and there's already 87 comments. Oh, Bitfinex and Tether will be required to pay an 18.5 million in penalties, which is almost half their reserves. Well, that must be almost half their reserves is what that person is saying. Of course, we don't know what their reserves actually are. Okay, so this guy is pointing out something interesting, pointing out that they got a loan. So the day that they said that they had the cash reserves, it came out, it did turn out that they did have the cash reserves, but only because they got a loan from somebody. But I think that this pretty much completely verifies that everything we've been saying about Tether is true, that you can't rely on the it being backed, because too many times it hasn't been, and they've been lying and defrauding everybody. Butter's initial response seems to be only in New York, completely ignoring the fact it's a fraud. I agree. I still think that Bitcoin is gonna get really hurt by this. The reason I'm disappointed is because it doesn't end Tether. It doesn't end Tether, but anybody that's anybody that really understands what's going on is, how can you be involved in Bitcoin at this point? Like, because you have to acknowledge at this point that like 80% of the money doesn't exist. It's a mirage. It's kind of scary. Okay. So will the SEC and the Department of Justice step in now? Ooh, okay, that's another interesting point. Is that if the New York Attorney General just finds them for that, what can the SEC now do? And the SEC could do more. Well, the Tether people are actually like celebrating. That's funny. SEC will rule that Bitcoin is a security and under their jurisdiction, and go after the market manipulation and prohibit BTC, or at least any BTC that has ever been on a foreign exchange, maybe. Oh, and they settled. That's the other thing. Tether settled. Considering how litigious the USA is, that 18.5 million fine basically says we want everything in crypto to just keep chugging along. We just slap the backest sheep over the hooves. Yeah. Tether gets slowly deflated and other stables can take their place, probably. But all of our suspicions confirmed? Yes. Further, companies must submit to mandatory reporting on core business functions. Specifically, both Bitfinex and Tether will need to report on a quarterly basis that they are properly segregating corporate and client accounts, including segregation of government-issued and virtual currency trading accounts by company executives, as well as submit to mandatory reporting regarding the transfer of assets between and among Bitfinex and Tether entities. Additionally, Tether must offer public disclosures by category of the assets backing Tethers, including disclosure of any loans or receivables to or from affiliated entities. The companies will also provide greater transparency and mandatory reporting regarding the use of non-bank payment processors or other entities used to transmit client funds. Tether is done. Well, maybe not, because, like, say they made all of their money back and they sell it all into dollars, and then they can claim that it's in dollars and, you know, everything is hunky-dory fine. Yeah, Winston can search for an article for you and post the link for you, but... None of the major USDT exchanges are based in New York, and there's no reason to believe jurisdictions they're based in will follow New York. Sure, but I think that it would be naive to assume that there won't be follow-up consequences from this, right? Feds have to take action now. And this guy's saying, this is a win for Tether. All the info in the press release was revealed 2 years ago. Well, we didn't know quite to that extent, but they're right. Some of this stuff we did know. It looks like Tether successfully stonewalled them. The AG might have wanted to cut their losses on a tedious and expensive case. It's bizarre that they have nothing new. Maybe they just didn't feel like going through the 2.5 million pages of documents Tether dropped on them. Without an enforcement mechanism, Tether will laugh at these puny reporting requirements. Okay, so now let's see what Bitfinex says. Why Tether's collapse would be bad for cryptocurrencies. Yeah, Tether's collapse would be unquestionably bad for cryptocurrencies, but this agreement isn't going to cause a collapse. It's still bad. I bet you that it's a significant reason behind why the Bitcoin price has declined as much as it has. And I would say that it's not unreasonable to believe that insiders were selling yesterday because of it. Receivable from Bitfinex. No one reviewing Tether's representations would have reasonably understood the $382 million listed as cash reserves for Tethers had only been placed in Tether's account as of the very morning Friedman verified the bank balance. Yeah. Tether had access. Yeah, he's just repeating what they said. Now he's attacking people who are saying, contrary to online speculation, there was no finding that Tether ever issued Tethers without backing or to manipulate crypto prices, said Weinstein, a former federal prosecutor. That is objectively false. They, at times, were not backed at all. that day, if you had gone in and asked for your money back, they wouldn't have been able to give it to you that day because they didn't have access to banking, period. It's just so interesting. What's this one? What's this one that you've got? Oh, that was the one that I already... That's basically the one that I already linked. Oh, did I not link it? Oh, no, I did. You're just linking it again. This is interesting. No, man, all of my J's are trading in, well, let's see here. No, now that's interesting. My J Max, which was the one that I traded yesterday and did really well, is actually seems to be doing the worst. Well, and the inverse of the Max is the one that's is the one that's doing the best right now. I don't think that those numbers are going to hold up, though. But the inverse ones seem to be doing better. That's funny. Bitcoin continues to trade lower today, below the 5,000 level. The cryptocurrency has been trading lower since. I think that you're, yeah. I mean, anybody saying that this is, this is really bad just because of the where it's at. What is your style? I'm scalping. Generally scalping. I really should be short the S&P 500 really, but yeah. Tesla just does not look good at all. I caught a lot of that down, got greedy, and got stopped out. Oh, really? Well, when you look at the swings, they're definitely being difficult. Oh, okay. So you traded the S&P 500. I mean, swinging on an index is a very different sort of a thing, don't you think? Because, well, and maybe even an easier game in some respects, right? Because in S&P 500, when you're swinging it, you just have to go long most of the time. And, like you can buy the dip. And I do find that when the S&P 500 like goes for those big declines, like those 20% drops, that they're kind of hinting it to you as it happens. And so I think that it's still difficult, but you can definitely like catch it as it starts to happen. And if you're swinging and you're willing to take on a lot of adverse excursion risk, you could, once it starts selling, you could just pick a spot and sell it and then just sit back. For scalping, that kind of action like really, really can hurt you. And so you kind of have to like catch the early move first and let it run. Like trading the indexes. Yeah, well, like I was saying, there's stuff that the indexes do that it seems to me that a straight commodity asset doesn't. Behold the amazing new world global currency / asset, which order books are so thin that a $200 million market sell causes prices to cascade into dropping almost 20%. Well, probably all of those, there's a lot of people doing market making in crypto, and they probably all pull when they see that stuff. Massive Bitcoin whale transactions. See, these were whales where people trying to get out, knowing that the Attorney General thing was coming. What's next for Tether? Let's see if the peg holds. Yeah. Right? You really, I mean, like, honestly, who would want to hold Tether after that? It doesn't mean like panic, but like, I wouldn't hold it. I love how behind the eight ball of our effing regulations are that they are told they have to tell the public what's in the hot dogs, not that they have to stop making them, right? It really should be that they shouldn't be allowed to do it at all. Well, actually, I take that back. You can go and make loans and loan people your stable currency or whatever, just as long as you're being honest with the public about that's what you're doing. Why are there big moves pre-US Open? Well, so one thing, Pepsi, that you gotta realize is that a lot of the global markets these days are being driven by money from China, right? They're these Chinese investors and they want foreign exposure, and the Bank of China is printing a lot of money, and so you tend to get big moves overnight because of the Asian markets. This move that we're having, this downturn that we've had a little bit so far before the open, you know, I think is largely related to Tesla. That's why I put that in the title and everything. Of course, it's always people are interested when it's Tesla, but we will see how far this Bitcoin thing goes with them, right? The copper price might not be quite healthy for Tesla and other car companies. Good trading. Yeah, I mean, the whole thing about that Tesla is worth more than all of the other automakers combined, I still just don't see how anybody can justify that kind of evaluation, you know? It just seems so crazy. Okay, well, we got about 30 seconds here. Spent all that time reading about that. You know, I mean, we could still try and go short MSTR for $100, but we would have to be so ridiculously out of the money. Well, there's interesting enough. There's an opportunity there at 19. Maybe you should go for that one. I don't want to spend $300 on it, but look at that. That one is mispriced. Well, there's a lot of open interest on it too. So maybe they want you to hit into that one. But it's 380 when the one below it is 640 and the one above it is 610. Same with 400. I don't want to spend more money on it, but that's the ticket right there, 450, 380. I'm just going to make a note of it here. Was that March or was that July? That's July. July 450, 380. So what happens if we go to like March? That's also 450. Oh, that's kind of weird. Or was I not looking at the right one? Oh wow. I was looking at March, not July. So the March 450s are 380. Man, they're asking a lot for puts, man. I smell something weird. It smells like a balloon or something. Okay, so here's the open in the S&P 500. Tesla is trying to buy out the dip on the open. He's decided to take that momentum short. It wasn't actually as big of a delta change on the open as I thought it might be, but it does look pretty solidly down at the moment. Okay, so pretty good downside excursion. They're running into some liquidity there. You saying pretty crazy volume? There's some pretty good liquidity there, but I mean, look, they didn't have much trouble getting through them. Okay, so which side there took the losses? Looks like they're all getting back into new positions too. Okay, so there's somebody pushing back right there. But look, the seller is like, nope, I'm taking it. There's a lot of selling now. The initial, like off of the open, it wasn't really super strong, but that move now is pretty aggressive down move. More aggressively down than yesterday's. No, there's still a little bit too much activity at 38. Well, that was some pretty good up movement right there. So there was some buying in Tesla off the open, but they didn't get very far. Good trade. Indy doing pretty good there off of that. Brandon made some money. Why did I buy? Because I felt like it. Listen, I say this all the time, but if you're looking to snipe strategies, it's the wrong stream. So I tend to keep the finer points of why I do what I do to myself. I can tell you one thing though was that I saw that there was a significant amount of liquidity that was trading at 38, and you know, like the latent buy side liquidity was there, and I saw some market orders aggressively buying it there. So I thought, oh, this is a pretty good spot for a possible pullback. But look, they're moving lower now. So part of it was luck. My strategy is that's the way to do it, Ace. I suppose there are some strategies that I would be willing to sell, but I'm not going to promise that you'd be successful with them or anything, you know. Bitfinex says, apparently none of y'all know how this works. I getcha. I see what he's saying. Yeah, this is what I was kind of thinking. Was like, okay, so like the Tether thing happened. That doesn't mean that it's over. Futures Trading Commission and the Department of Justice could come and step in now, yeah. I mean, why wouldn't they? If you work for the SEC, man, and you're not investigating that, what are you there for? Like that is a career defining case right there. Are you gonna pass up on it? Markets have lost insulation as dealers turn short gamma. Okay, so that is important to note, I think. So let's come back here and look at our volume profile. Oh, that's right. 3,800. Well, you gotta be careful because sometimes they bait you into this, like, going short and they immediately reverse on you, right? Okay, so that time my long ones, my regular ones, did well. Oh, no, wait, I take that back. I'm kind of wondering, because yesterday my base level strategy did so well. And now I'm like, well, why isn't it doing as well? But that could just be that because today is much more of a trend down-ish kind of looking day. Okay, so you see that. That is pretty aggressive. Yeah. That's not what I want to see. So I'm going to get out. A little bit too much liquidity there at 38.35. Oh, wow. That was a good call. Good. I was feeling a little like, why am I doing this? Nah, but no, as soon as I saw that absorption on the short there, I was like, okay, yeah, no, I gotta get out of this. And I'm lucky that they let me, frankly. I'm lucky that they let me. Man, Tesla's just getting destroyed. It is now down 10%. Now we're changing the title to Tesla crushed 10%. Tesla drops 10%, man. Tether settles with New York Attorney General. I think I could probably come up with a spicier title for that, but I don't like that, huh? Can't be placed above the market. I wonder why that happened. That has happened to us before too. We need to figure out why that's happening. I think it's because I try and use it with a market order or with a limit orders. So maybe have something to do with like where the limit order that I'm taking for the one is where like a limit order for another one already is at. And could be that I need to segregate the accounts. Well, it wasn't the broker. It was just NinjaTrader. It's trading those robots are trading on sim accounts. So I'm also noticing something here where like when I look at them and like what price that they're setting them at, don't think that that's where it's supposed to be taking it. Why is the arrow show up all the way up there? See, they are saying 86. See? And it's doing it again. Oh, it was Indy that did that one. Huh. Your ladders are completely effed up, really? I know I can open an account with less than 25k, but what does the 25k do for one's trade? Nothing. I mean, I would start with like one, or well, if you have that much, I would start with 2 contracts. And, you know, you don't want to leverage up as high as you can go. So you don't necessarily need to have all of that money in the account at the same time. And in fact, you know, when you start making money, you want to take it out because you know, you never know. Maybe it's my PC, but they can't track the speed. Yeah, I wouldn't be surprised. I think NinjaTrader might be having an issue with it because it's like, and I don't know if it's the number of things I have on and stuff or what, but my little experiment with running 8 different forms of a strategy don't seem to be working out. Well, this is just still going. I, was kind of looking for, hey, maybe they could turn around, or at least there'd be a little bit of a reprieve. No. Well, there's another liquidity spot there at 38.16. But look at that. Like they just crushed through there at 38.20. It could be that my data is slow. I don't know what's causing those errors. I'm going to have to really research. It might be difficult to figure out what's going on there. But it could just be using limit orders, multiple robots in the same strat. I don't know. Actually, I don't know. Like, that doesn't make sense. I don't think that something like that should ever happen. It was about time for Tesla to start bleeding, right? I mean, I'm not gonna lie. I'm kind of enjoying seeing Tesla take it on the nose. So there's been so many people sitting there and patting themselves on the back. They're geniuses. That ARC lady in particular. You know, because they caught Tesla. And you look at it and you're like, this is not sustainable. You're not a genius at all. You made money in spite of your own stupidity, you know? And when I see people making money off of that, it does make me a little happy to see it fall apart. Okay, so I am getting a hint of there's probably another push. The treasuries are just really showing the fear. It sure was an ugly move below 38.20, wasn't it? Is it down 7? No, it was down 12. It's down 12%. I mean, if you take that from the open, yes, but it is now down 12%. Like 10% should be holding stuff. No, because remember in stocks, it's a certain percentage move within 5 minutes. And I'm not sure what that threshold is, but it would be very difficult for Tesla to reach that threshold. And there they go again. So at this point, you know, I really should have just been taking shorts at some point. I kind of saw like 2 pullbacks, and then I didn't expect it to just plunge this quickly and this fast, but now it's trading so erratically that I don't think that I can really catch anything here unless I really take big stops. So I think that we will just continue to watch here. Wait, what the hell? I got these robots that all kind of took a short, and the amount of unrealized profit that they have is not correct. They should have taken their profits already. It seems like I have an error. I have a problem with my algorithms that I need to look into. Probably something to do with the way that I'm managing the orders. It's just wrong, and I don't know any better. Even robots get great. No, I don't know, man. Like, it should have taken the profit. Like, well, now some of them are taking the long. Oh wait, did they? Now it's off. Wait, what? I'm so confused. Like, I'm really, really confused. Well, yeah. Well, you know what? Brandon did good, so there's that. Oh, I don't understand what just happened. Because they didn't. I'm not seeing the exits. But look where I'm seeing like the arrows come in and everything. This is something very, very wrong. Something very, very wrong here. Oh, that's not where I want to go. I want to go into logs. That could be, well, yeah, it could also be a tick replay thing. Submitting order, submitting order. Oh man, it logs a lot of stuff there when when the robots are doing stuff. Let's see here. That wasn't the same error that it gave me earlier, is it? Oh, there's your reversal. You see that what at the point at which I'm like, well, that's not going to happen and I shouldn't trade as too erratic is like when you get like a massive pullback. That's okay. I only took 2 trades and they were both winners. Well, that's not helpful. There she goes again. I'm wondering if I'm getting oh man, so a bunch of those now killed themselves, huh? Yep. That's funny. Well, not all of them died, just 3 of them died. So hold up. The thing is I'm not actually setting a price, am I? Oh, I am setting it like that. Oh. Well, ooh. Oh, and his Ninja Trader's data is like delayed or something? What's going on here? Let's turn all these off. Huh. Oh. Oh, that's interesting. So when I did that, you couldn't see it because it was behind my face, but Ninja Trader was really chugging along, and then when I killed them all, it recovered. So it could be that Ninja Trader can't handle that many tick replay strategies at the same time. Trying to think of about what the best way to do this is going to be. Because I think that I'm going to have to do it all by hand. Poor Ninja Trader must be stressed out. I'm running like 8 tick replay strategies at the same time. They're all doing the same thing. That is a lot of computation. And they're running on each tick. So they have formed a pretty good distribution around 20. They sure dropped through it though, didn't they? Tesla are racing almost all of the declines since the open. So now it's only down 7%. But Bitcoin's still looking pretty sad. So how should I do this? Okay, here's what I'm going to do. I can hear the baby crying. He sounds very, very unhappy. Mm-mm-mm. Mm-hmm. 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 And then and then I want to come over here. I forget there are two output windows, right? Yeah. How do I get it to output to the secondary window? Oh, okay. Oh, I see. Yeah, I have in debug mode on too. That probably doesn't help. Tesla turning back down again here. Oh. Okay. Let's change that and get rid of the debug mode. Okay. Then we'll add the strategy to this chart right here. HFT. Enable the MES. One range. Okay. Okay, so already detecting a mistake. Okay. Try it again. That's no good either. So in here, I think I have to come in and say, and real time. Okay. Oops. Okay. Oh, can I change it so that it... I'm just going to disable it for a second. Let's see here. I can change it so that it doesn't run historically, right? Maybe not. That's okay. Okay, cool. Then clear this. All right. Now what I'll do is then just get the raw values out every time that there's a potential entry, and I can go and inspect them within R and determine what the best thing to do is. The psychology, as I understand it, is that if something is so big it's hard to understand, well, yeah, well, so there was a study about that recently. I saw that as well. And basically that in some of these complex situations where you don't have all of the information, that it's more likely that people turn to conspiracy theories. Yes. But I think it's probably more complicated than that. I think that might confuse cause and effect, because conspiracy theories tend to pop up in situations when, kind of things happen that don't necessarily make a lot of sense, that aren't what people expect. Zero Hedge says, if this isn't a blow off top, ... Well, I need that to come over here and analyze my, keep something open for my CPU. Oh, you know what? I'm also making a mistake here in that I'm not renting the longs. I should do it like this. That way it's like easier for me to format. Okay. Okay. Can close that. Close that. Oh no, we should keep that open. Just put it over here. Okay. Well, things have calmed down a little bit. I think I could probably try and take another trade. Oh yeah, what is ARKK doing, by the way? Down 7% today. Well, our rare earth resources has taken a pretty bad hit today, too. In fact, I bet you if we come down here, yeah, that's pretty ugly. Pretty ugly, although the GS not taking it so bad, so that's okay. Silver coming back quite a bit, though. Of course, big dollar moves, so that makes sense. Now, the treasury is just all over the place. Man. I wonder, would I be able to handle what they're doing in the treasury right now? I think that I would be really frustrated. Zero had some words of comfort for everyone panicking this morning. I don't know, like it doesn't... that's so funny. To me, it doesn't feel that bad. I guess I've kind of been a little distracted, but like I look at this and I'm like, okay, it's a decent down day. It's not like the end of the world. It's not like last March or anything like that. But people are definitely panicking, aren't they? I mean, if you were in Tesla, if you were all in Tesla, then I understand why you might be a little concerned right now. Why are you guys talking about the moon? How did you guys get on the moon? Well, okay, whatever. Oh, I'm just realizing something. Okay, I have to turn this off again. Yeah, okay. I need to come in. Oops. I need to come in here. And I have to give Jay in names. J short class current bar. Wait, what the heck? Some guy on the news saying, oh, if you had the vaccine, those people might wait. Yeah, because it's awful if you take it immediately afterwards. So, like, well, he shouldn't be talking. Bar, okay. Ness only has them. That doesn't make any sense at all, to be honest with you. The Robin Hooders are not used. Well, I understand that. I mean, it's not the first red day that they've seen since this has all started, though. I think this is kind of more of a like, oh crap, everybody kind of warned us, but now it's too late. You know? The thing I'm having a hard time with still is like this Bitcoin thing, right? Because we're all like, okay, so is Bitcoin a risk for the markets? And it's like, well, I mean, Bitcoin is going down and the markets are going down. Coincidence? I think not. Actually, no, we don't really know. I don't know if it really tells us anything. Like, that's the issue. So it's like, I kind of feel like that this would be happening regardless of what Bitcoin was doing. Losing the master copy of the Apollo 11. I bet you they'll find it someday. That sort of stuff gets lost all the time, though. My entire Momo list of SC, I don't know what SC means, and SPACs is red. Yeah, I bet. I'm actually kind of surprised that the decline on ARC isn't worse. Okay, so now the Q&A is starting with Pal, so I don't necessarily want to be taking trades during that. Hey mate, do you got order flow like Bookmap for Bitcoin? Well, so you can use Bookmap on Bitcoin, but I like to use the DOM. I don't think that the DOM would work very well, at least my DOM would not work very well in Bitcoin, because you would really need the ability to aggregate multiple prices together, you know? Then having a DOM on something like Bitcoin would be useful. I'm sure at some point it's going to get in there. They're going to need to get it because, like, how am I going to liquidate all of my millions of dollars in garlic coin, right? I mean, it's not a million. It's not how much it went down. It's like $2 now, 2 cents. It's like 2 cents now. But I don't have Bookmap. What you see is what I use. Oh, and there's that kind of thing. Ooh, the Vista chart, it's pretty. It's a party. Oh, did I not clean the output? Well, I think we're okay. Crap. Did I Those two are giving me the same number, which means that I goofed up. I done goofed again. Oh, no. Well, that's interesting. Min, max. And why? There's definitely something wrong, but I don't know what. So when it's printing out here, the levels that it's giving me are the same, no matter what. Even though they're two separate values, and they'll almost always be different. So then I'm looking through what I print out, and there's the minimum difference 0, maximum difference is 0. Minimum difference of 0, maximum difference of 0. How are they the same? That's impossible. No, it's not true. Lots of extras. No, they don't. That's nonsense. That's nonsense. I've seen so many like debunking the moon landing hoaxes is like a pastime for the scientific community now. This is kind of funny. They're always finding new things that kind of make it look like, man, you must be really. See, this is here. You're going, man, Ace. I'm just telling you. I'm trying to help you here, Ace. Okay. Arguments based on authority are ineffective. Okay, particularly nowadays. It's like if you don't feel like you know enough about the subject to really give the argument on it, but you can say, well, I know this person that was really smart about it and he has debunked it or whatever the deal is, then okay. If you don't feel like you know enough about it, then don't argue it. You know what I mean? Like, let the person that knows all of the stuff about it argue it, because you might say something but it's just, it doesn't convince that person, because all you get then is, this other person said something. And so then they have to go and see what that other person said and verify that everything that they said and do all of that. And, how do they know that what that person is saying is really accurate or not? Like, they really don't. So it's just like, it doesn't convince them at all. It's like the worst kind of argument that you can make, especially in a conspiracy theory context, because the conspiracy theory context is that the establishment and the experts are all working in concert to hide the truth. So anytime that you post a quote unquote expert, they're going to reject it because the expert is obviously in cahoots with them. And I mean, it's a pretty sensible argument or strategy to make from their side, because I mean that stuff does happen. and quite frankly, a lot of the experts out there really don't know that much. Sure you did. You said, so who is these lots of experts to... Well, I guess RJ was kind of really more the one that was making that argument, wasn't he? But I think that the only thing that you can do is you can look at a specific claim. And don't let them gish gallop you, right? You have to say, okay, so what is a specific claim that you see that you think proves that the moon landing was a hoax? And then we can look at that and we can, talk about that one until you realize that you're wrong about it. And then we can move on to the next one. I mean, obviously, there's a difference between these two values, or the robots earlier wouldn't have been taking different trades as they were supposed to. So where is the issue? I don't understand. It's like it's not calculating it or something. I mean, well, let's debug it. Hey, thanks for stopping by Public Space. Did it I don't know if it compiled. Debug mode on. Okay, yeah, it didn't compile. I bet you I'm going to go in and I'm going to inspect the actual values in debugging and find them that they're different. I bet. Oh, there's another little turn there. It still looks a little too volatile for me to touch.
Block cell.
Okay, well, let's start out by re-enabling the strategy. Okay. Guess we have to wait for it to take a trade. Like, I mean, this is just like, this is a great example, Blend. So look at the Fisher, RSI, and MACD on Bitcoin, a trifecta of fact. Well, it may continue going through. I think that it has a really good chance of continuing, But like here is just like the perfect example of where technical analysis fails. Because I was telling you guys on Friday that you probably want to short this rise that you were going into the weekend, that it was suspicious. And you kind of know all of the fundamentals and everything else involved in it. You know, as soon as it started declining yesterday, you could have taken. You didn't need to wait for all the indicators to tell you that. Tesla might actually finish green today. Well, let's see here. So yesterday, let's zoom this out. So they closed yesterday around 7:10. Yeah, it's within sight for sure. The thing is that it looks like the market is really responding to the treasury market still. And as the E-mini goes down, the treasuries pull back. And so then the equities are like, oh, it's okay. And then the treasuries are like, oh, they think it's okay. We can sell again. And then, you know, this doing this push and pull thing, it's pretty messy. Pretty messy. Dang it. Okay. So it's still doing it. Those two values it's printing out are the same, and they're not the same. Like when you look on the chart thing, they're different. Like it's printing them out on the chart that they're different. So why is it not? Why does it, when I try and print it to the console, it thinks they're the same? What am I seeing there wrong? Oh, somebody's at the door. Hold on a second. Okay. Let's move this over here. Attach to process. Well, it sure took a lot there. It's funny that I'm doing this during the market, but it just irks me so much. Like it should be, okay, well, fine, we'll do it tomorrow. So I don't even necessarily expect to want to, you know, like this should make some money and then crash. You know? So it's like, but I at this point, I'm too emotionally invested in Jay's performance is what the deal is. Fed's Powell, monetary policy is a broad tool and can't specifically target low-wage workers and minority workers. Gee, that's not what you were telling everybody when you were virtue signaling last week. Really? Okay. So we're waiting for it to give an entry and break on hit our break point rather. And then see what it's printing out. What were you looking at here? Do you look at TAA at all, like previous support levels, etc.? So, I will look at certain things because they will give you an edge. So, like, how do I explain this? So, you might think CCI gives you a really good idea of trend, and you could trade the CCI and see the trend. It doesn't. There's nothing predictive about it. It doesn't tell you it's going to turn here. More probability of it's going to turn here or not. I haven't been able to find any such edge with it. But what I have found is that when you do get winners from CCI, if the CCI is below 200, for instance, and you go long, then you can catch really good runners that really run because you're trading so against the momentum. You get what I mean? So that is where I care. So is this one of those things where that point it doesn't see it, and then once I've done no, and then it doesn't print anything out to me? Ah, gosh. Just I've run into this more than once with this strategy, haven't I? I don't remember where it was last time. It is giving me the two values it's telling me are the same, but then that is not what prints out. What the fuck? Calculates on Barclay. I don't understand. Yeah. Okay, so that little bit of error. So what that really comes through is when NinjaTrader starts to be too slow. The Tether news is suspicious. What's suspicious about it? The New York Attorney General made an agreement with them.
Block by.
Sorry, I'm like juggling multiple different things here. So let me go back. So technical analysis, I'm only going to pay attention to the technical analysis if I have backtesting results that show me that there's a particular thing that I can pull out of it. And I'm just going to straight up say that I have never found a setup that involves purely price that has a probability of predicting which way it's going to go. Just straight up, I frankly don't think it exists, because what you're seeing with just price just doesn't tell you a lot about what's really going on. It's too incomplete of a picture for it to really be very effective at predicting the short-term direction. So yeah, all of these patterns and all these things, I completely ignore them. And the only time when I'm interested in looking at those things is when I can see people trading off of it, and I want to see too many people trade off of it and trade against it. Like, I want to see that setup fail. So like what's happening in gold right now, I think, is a great example. It's like it went below, there was a death cross, and then I can kind of see the market, some good volume on it, pushing it below that 1800, and then it comes back and it recovers that price. And even today, after them pushing pretty hard down, gold has recovered that, and you're back above 1800. So here is a strategy that is popular enough that it gets mentioned on CNBC, the death cross. It's complete bullshit, and I'm literally trading against it and making money, right? Let's see here. Okay, bro, no worries. It was a lie by Tether. Well, yeah, so Tether was lying in 2017. And they could be lying since, and they've made an agreement about things that they can and cannot do with the New York Attorney General now, and they cannot work with New York clients, which is an important thing. Like, there was hedge funds buying in Bitcoin, and they can't anymore with Tether. They can't do it anymore. They have to go through Coinbase or whatever, you know? Makes a big difference. But doesn't put a stop to the money printing over there, or the, what do you call it? You know, the margin loans, essentially. So it's not like a complete collapse in Tether itself. But I do think that it's bearish for Bitcoin overall, and is just kind of in a really bad spot. Yeah. The death cross is a technical chart pattern indicating the potential for a major sell-off, and has been proven to be a reliable predictor of some of the most severe bear markets. Yes. And if you go in and you backtest it, you find out that it's really not what's advertised. So, like, yes, a death cross does happen before major declines, but it doesn't really have a very good probability of actually predicting it. It fails, and it fails a lot. And I'm more interested in when it fails. Yeah. USDC is the deal now. Well, there still shows that something like 80% of the volume that comes through the Bitcoin market originates from Tether. So that's a pretty big problem. I think it's funny, you know, the Bitcoin guys are still in denial about it. Like, they're like, well, this isn't a big deal. And I'm like, you're not sitting there and saying, like, I was swindled in 2017, that I was buying because Tether was, all this money was coming in from Tether, and it turns out that they didn't even have access to banking? Yeah, you should be pissed. Why is this? Okay, so now that we've talked about those two things, back to over here. Why are these giving me the same value when they should not be? That would maybe, well, so, oh, that's not what the one that I want anyways. It's the resting orders one. Okay. Okay, so it does happen on bar update. First tick of bar, that might be a problem. But why was the other one doing it then? Oh, that doesn't make any sense at all. Oh, look at that buying. They're going chomping at the bit, going crazy now. I don't think you want, I mean, this kind of looks like irrational action. Why are treasuries heading? I think that it's why are equities heading the same direction as treasuries, right? So you see what happened, right? I mean, come back over here. Hold on. Let me minimize all this stuff. I mean, you're asking kind of, you're on the right track, bud. I think you're on the right track. But look at what the treasury did. They were pushing pretty aggressively down, And then the S&P 500 said, "Oh, we're going to sell off hard." And so the treasuries went up because of, the risk off. And then what happened at 51? Then we'll come back here. 51, the S&P 500. So right here, the S&P 500 started recovering, so they went all the way back down. And then I don't know if Powell said something or what, but now they're kind of both going up. So equities are, it seems to me that equities are trading the way that they are at the moment, primarily because of the Federal Reserve. So trading from a risk on, risk off. Yeah, I mean, we could have taken it both ways. I guess it would have been interesting to see me try and actively play it, but I think it would have been really tough to have pulled that off, Sometimes when it's doing stuff like that, it's better to just sit on the sidelines. Why Tesla and Bitcoin? Well, that one might be a coincidence. I mean, look, Tesla has recovered to yesterday's prices and Bitcoin is still down. I don't think that you actually have to calculate this on each tick. Now, which one was I using? Was I using the new version of it or the old version of it? I was using the new version of it. So let's close that out. Come back here. Tell it to do it on bar close. This if statement where I'm telling it to do it only if it's the first tick, I think will be incorrect. And then I can come down in here and don't think I need to change anything there. Have you thought about making robots hedge their positions in risk on environments? Well, so the only thing that I have found on that seems to work is to just turn the robots off when volatility gets over a certain level. And you can do it based on the VIX or the average true range, or you can do it based off of directional. Like there's a couple of different ways to do it. And it seems to me like which one you use isn't, for most of you guys, it's not particularly important which one you use. In markets, you will never find the reason why. False. You can absolutely determine the reason why, or at least provide pretty good evidence as to what's happening in certain situations. And if you can understand and predict what certain things are going to predict the markets, you can make trades well before the technical analyst traders are going to be able to make trades, and then get out when they're all realizing it. Okay, did I? I forgot if I compiled that. I didn't hear the sound. That's like saying that is just like saying, oh, you can't actually know if the decline in 2008 was caused by the housing crisis. Like, come on, dude. Markets react to changing expectations of the future caused by news and fundamentals. They do. And if you ignore that section of the market, you are ignoring 80% of the data and information that's going around out there. You, my friend, no, you're the one that's providing very dangerous counsel. So let's go back to the other thing. 80% of day traders lose. Guess what? The vast majority of day traders try to trade purely off of technicals. Every study that has been done on technical analysis and on, even on studies where they're doing like data inspection and trying to find edges those ways, show that it is not a reliable strategy. Learn how to read a chart. You're wrong, and you have zero empirical evidence. And I'm tired of you coming in here and saying all of this bullshit and then never backing any of it up with any kind of historical back test or performance or study or anything of that sort. You can't just come in and say stuff. This, if you want to go and mislead people, if you want to go to a channel and say, hey, I know everything about technical analysis, you should trade this thing and this thing, and then expect everybody to believe you just because you said it, you are in the wrong channel, because we trade off of empirical evidence and history. Okay, sometimes we will forward test things, but I'm not just going to go in and say, oh, let's add this indicator onto it because this guy says it is, and then hopefully it will work out. No, it won't. You know why? Because every study that has been done on this says that it doesn't work. And if you think that it works, then it is the burden is on you to provide empirical evidence, that is data that we can inspect and verify for ourselves, that shows that certain strategy has efficacy. And you've been asked to do that multiple times and you won't do it. So I can only assume that you're full of shit. RJ Whale says, every study, Seth? If you can find one that doesn't say that, I would love to read it. Because you have no clue how many studies on technical analysis I have read through trying to find that sort of a thing. So where's your empirical evidence? That's all I want to know is where's your empirical evidence? Because you know what? I've shown it to you before. There is empirical evidence that shows that markets react to news. There is. And I say, if you can determine which way, if you know how the market is going to react to a particular piece of news, you can take a trade off of it and make money. It's a little bit more complicated than just hearing like, oh, this piece of news is good or bad and taking a trade based off of that, but you can do it. Chart analysis is astrology for men. It really seems like it is. I think he just tries to troll me. I don't even know if he actually has. He like, here's the thing: is that if you have gone and back tested something and found that it has some historical efficacy, then you would present that information, right? Remember, I tell you, this is a filter you can use that is so effective. Man, it's so effective, guys. People tend to use the argument that they think is the best argument first. If you had empirical evidence, wouldn't you use that first? Wouldn't you say, oh, well, I can prove that technical analysis works because I've run this intraday strategy and it says this, right? And let's limit it to intraday strategies, because I can actually show you stuff on swings that do okay. You know, like how do we say? Oh my gosh, it's still doing it. Fetch. CTAs kind of are based off of momentum, and you can kind of push them in from technicals, right? I never understood backtesting. Isn't this more relevant for automated trading? I mean, don't you want to verify that if you're going to use something in your system as a discretionary trader, that it actually does what you think it does? Yeah. I would argue that you would not present that info, just watch the free will of the dumbed down, argue programmed thought forms. If you have absolutely no intention of verifying it to anybody, why even bother bringing it up? Blunt is most probably a 10-year-old kid. Well, supposedly they all think that he claims to have some sort of significant edge. I keep him around because I think hoping that he's going to actually present data. But every time that you say that, he just goes silent. Plus, it's kind of fun to beat up on technical analysis, to be honest with you. Man, I'm really frustrated that this my indicator doesn't print correctly. Because when I tell it to do stuff based off of the values, and it will tell that when they're different, but it must be something different. It must be doing it differently based off of whether it was below. Maybe that's what it was. Maybe, but then why does it print out differently? Well, hold on. I want to come in here. I'm going to look at this. Okay. And this min difference and max difference shouldn't be. Yeah, something weird, doesn't it? There's something going on with my newer version of this indicator that I don't think I completely understand. So when you do the blue, you can see the blue there. Let me make it really bright. Let me make it gold. Yeah. Gold is too much. Or magenta, we'll do a magenta. So when you pull it out, you can see that it's giving different values. You can see the color there. So the values are different. But why is it that when I try and print them out in the strategy, it doesn't tell me? And we run into this problem before, right? And I don't remember where it was or how we fixed it. Okay, back to what you're saying. Oh, so you're asking, somebody asked me what a CTA is. It's a commodity trading advisor. So commodity trading advisors are basically trying to take advantage of a commodities tendency to trend. So like oil is probably the best example right now. Is you could have seen that, you know, momentum was building in oil and taken it that direction and, you know, still be holding it. And the CTAs, their specialty is more about managing that position as you let it run, right? So you might use some technical analysis on a daily basis for your CTAs, but you're not going to do that unless you have some inkling about that the fundamentals are going to start moving in a certain direction too. Well, now it's 3860, the S&P 500. It feels like, ugh. Now, I guess a caveat here is that the downside momentum was really too much. So, what time frame is the best for traders to do day trading, scalping, swing trade positioning? Okay, so I'm not going to say that there's a best anything, John, but I can tell you that there is different kinds of behaviors on different time frames. Okay, so this is another thing that technical and analysts will tell you is that you can just trade it at every time frame. They're full of shit, dude. Okay, so when you are in a position for a long time, it completely changes the expectancy and risk-adjusted returns of your system. So the longer that you are in a trade, the more likely it is to turn out profitable, like straight up. And the more money you'll make, generally speaking, the longer you're in. So that's the advantage to a swing trading strategy. And you'll notice when you go around and you find people that are claiming to be profitable, you're going to find more of them from swing trading. But then what happens for those guys is that when you dig into their results, you'll find that their risk-adjusted returns aren't very good. They might as well just be trading the S&P 500, right? For the intraday scalpers, because you're taking on so little time risk, the risk-adjusted return isn't necessarily as big of a thing as much as it is like the consistency of it, right? So the drawdown. So on the short-term one, if you run across a strategy that's profitable, the caveat, the thing that ruins those strategies is the maximum drawdown. Now, when you run across somebody that has a very, very small maximum drawdown, that's kind of what you're looking for, right? Because as a day trader and an intraday day trader, you're looking to live off of it. So you need consistency. You need to be able to come out every month and pay your bills, right? So they behave differently. So it depends very much on what your goals are and this and that, right? So for me, my goal is to become the best and most knowledgeable trader possible. That's why I trade on short time frames with order flow on treasuries, because you're doing like one of the most difficult things you can do. Now, you guys said some other stuff about the Bitcoins, right? What's your opinion about Bitcoin for the long term? I'm bearish for the long term. Your goal is to be the new blockchain millionaire, right? Yeah. In the long term, except for Garlic Coin, Garlic Coin is going to be awesome. Oh yeah, 10-year-olds don't trade options. Yeah. Well, I probably would do more with options if they weren't as expensive as they were. Offer me micro options so that I can make or lose $10 on a trade, and then I actually, when I look at the options, I kind of wonder why they size it the way that they do. Like, I know that big traders trade them, and so it makes more sense to be in 100 lots, but like, you would get better liquidity if they were just ones, or even tenths of that. It's just there's a bunch of people that would be involved, and can you risk a 100? So if it's something that I really think is going to happen, and I think that the pricing on it is good, I might be willing to risk a 100, but I'm not willing to risk a 100 every day. At least not at the moment. Can I hear an amen for micro options? Seriously. No, Keller, remember, I sent you guys, well, I have to go and find it now. Like, I'll show you. Electron. Oh, you know what? I put it in a folder. Hold on. Momo's stalling a little. I have to say, this recovery is like pretty typical, but at the same time, it's like one way or another, the market's being incredibly irrational, right? Okay, so I receive new address. Make a new address. Okay, here you go. If you want to send me some Bitcoin, you send it to that address. But I'm going to bet you that none of you can do it. I'm going to bet you that none of you do it. Because first you would have to figure out how to use a wallet to send stuff. You would have to go buy it on the exchange. Then you'd have to pay a fee. But if you can send me a Satoshi, we'll see. We'll see if anybody sends me a Satoshi to that address. I don't think it's going to happen. PayPal is done. Okay. Okay, wait. So what if I come back to my indicator and I decide in here to also come in and, breakpoint on that. Okay, so I have to wait for another trade first and then we can do it. Consumer confidence, all-time highs. Oh, by the way, did we have... No, I don't see anything. We only have like 15 minutes left. I want to rant more about technical analysis. I want people to show me evidence. Come on. So the Fed come live and everything goes green. Well, it definitely looks to me like that it's trading off of that. Okay, so here we got the thing. Now I'm going to come in and put my breakpoint here and I'm going to press continue. I'll put another breakpoint right there. Total bids, total asks. Oh, wait a second. Oh. Oh, wait a second. I see where the error is. Durr. Oh my gosh, I would never notice it without using it in programming though. Oh man. Okay. So what's happening here is I'm putting something in. I'm putting something in here to as like a temporary variable, and I'm not actually doing the calculation until I'm doing the calculation every time actually. Am I doing the calculation every time? So there's the process max and there's the process min. But then over here, I'm doing this other thing. Like, why do I do that? It shouldn't do the on market. I should only do that at the end. Why did I do it that way? Oh well, I don't know. But we figured it out. Yay! What evidence you are looking for, like, so here's the thing. If you had a strategy that was based purely on an intraday strategy. So let's put the qualifications. What I would really like to see: intraday strategy that has been back tested over an 8-year period, and it's only using price, and it has a positive expectancy with a risk-reward ratio above 1. So I put that caveat in there that the risk-reward ratio needs to be above 1, because what people will do is they'll come in and they will say, well, you use your stop that's bigger than your target. Well, okay, so if you do that, then what your strategy is really showing you is that the market is more likely to touch a price that is close to current price than it is to touch a price further away from current price. No duh. So that doesn't really tell you anything, right? And this is something that catches a lot of people again, is they say, technical analysis works, but then the person that they're watching has targets larger than their stops. It doesn't tell them anything, right? So intraday strategy, back tested over 8 years, risk reward above 1, profitable expectancy. So that would be like the base. That would be like the base case. And then let's add to it a Sharpe ratio above 1. A Sharpe ratio above 1. Because I have order flow strategies that have Sharpe ratios above 1. That on the back tests that we have, they're above 1. So, okay. And the technical analysis strategies that I've gone through, I'm able to get a lot of the really good ones to be break even, but I'm not able to show them showing a consistent profit, and certainly not a Sharpe ratio of 1. Right? So this is what I'm saying. It's like you got all these people that are in technical analysis. A lot of them don't really know what they're doing. Like, if you actually go through and like back test things and you're doing intraday strategies, the first thing that you're going to learn is that it's really hard to find a back test that even shows a profit, period, let alone a consistent profit. So that would be empirical evidence. That would be what I'm looking for. But another thing that you could try and go and find, because some of you guys seem to think that maybe it exists, is a peer-reviewed paper that shows that technical analysis works. Now, there's kind of all these caveats about like what qualifies as technical analysis and this and that. But as it relates to Blunt's claims, we're really talking about patterns based on price. Okay. So we're talking about the analysis where price is the primary input. Whereas the way that I trade, the primary input is orders. Whether orders are buying or selling and what the level 2 is doing are the primary inputs to my strategies, and what the news and sentiment is for the day. Did you ever reference so you never gave me that, but what was the name of the article in the 2000, which month? Which article? I can go find it. I'll go and make another fake email address and sign up for them again where they let you look at them. And I'll find the article that you're looking at. But then I'm gonna say to you right now, are you sure that they're talking about an intraday strategy and that it's not using order flow? You must have dismissed it. Well, there's a lot of stuff that goes on. I might have missed it. Which month? Do you know which month? 2006 is a long time ago. So here's the issue I think you're going to have with that one is that we're going to go and read the article and they're going to show us some stats about it. And it will appear profitable. And then we'll come and we will test it ourselves and we'll find that it no longer works. But this sounds like a good test case. June 2006. And was just like the primary article bit that they had, or was it, I guess if you don't know the name of the article, I might be able to just find it anyways. To be fair, that article was written at like the height of the market, right? Yeah. Bullet ads, is that it had something to do with Bullet? Yeah, we'll look at it. The thing that I find, interesting about technical analysis is that it's not like I don't ever find statistical aberrations in the market. That doesn't sound like an intraday strategy. So here's what I'll say about it on swing. Okay, I believe there are some technical analysis strategies that you will find on daily data that will show a profitable expectancy, but not on a risk-adjusted basis. Oh, you know what? Oh no, we're 9:20. I'm like, do I need to do something? Man, it's only been 5 minutes? What? Well, CJ, I'm all in on the market microstructure stuff, right? So when you get into market microstructure, then you're starting to get into market behavior that has a good deal of empirical research behind. Okay. Like, for instance, the square root law of meta order impact. This is something that retail traders don't know about, don't research, because they kind of assume like, well, I'm not executing a large order, so it doesn't help me. But I personally think that when you go into that sort of stuff, that it kind of does tell you things about the way that the market tends to move that is really useful to you. So if there's anything that has empirical research behind it to describe markets on intraday markets, it's market microstructure research. That's the term that you want to search for. Some things stand the test of time. Let's go through and do it. I'll look at it, but I'm gonna rip you apart if it doesn't meet the qualifications that I put down on it, right? Because that's the thing, is that people will come in and they'll say, technical analysis does work, because it's like, I can get like some backtest to show me like a profitable result. But then when I actually drill down into the stats of it, I can show you why you really don't want to trade that thing, or that thing doesn't prove what you want it to do, right? Like the worst one being the risk reward ratio. You can't say that the technical analysis works, or that you're making a prediction when your target is closer than your stop, because all that tells you is that the market is more likely to touch the closer one. No duh. We all know that's not useful. Well, I mean, that piece of information alone could be useful to somebody if you're able to take on that risk, but that's not most of you. That's not most of the people that watch this channel. Does anyone trade a single? Well, then you're getting into indicator soup. So here again, like, there have been a number of studies where these people just put together robots and tested over 100,000 different variations of these indicators put together. Or I tell you what, you can go and you can do them in NinjaTrader, and getting it to spit something out that actually fits those qualifications, it's crazy hard. And I haven't seen one that does it. Not on intraday charts with an equal risk reward. The robots are indicators? Super wrong. To be quite frank with you, Blunt, I don't think you know what you're talking about. So I guess it depends on what you mean about the robots. But when we're talking about market making robots, the things that the market making robots look at is not even anywhere remotely close to what we look at or consider technical analysis. They are looking at the orders coming in and how many orders are coming in, and comparing that to the standard deviations and other information that it knows about the market, and it is adjusting its prices based on the flow that's coming in only. And they aren't making any kind of a predictive assessment at all. They're only doing something that they know they can break even on, and that's it. And that's the way that all of these market making robots work. And then there are the high frequency trading discretionary robots, which is what I do. And those are based on order flow as well, like that when all of the orders are going one direction or the other direction. They're not maybe a moving average, maybe as a directional bias filter, right? And then you've got all of the retail traders that are doing discretionary, that are doing automated trading with robots. And there could be any number of things out there, and who knows what they're doing and if any of them actually work or not. Like, that's the thing, is that there's a lot of, there's noise traders out there. And a lot of noise traders these days are just robots. But they don't actually, have a positive expectancy. They might, or the author might think that they do, but then they run into the market that it doesn't work. That's why I was saying, like, if you can do it on 8 years of data, intraday, 8 years of data, equal risk reward, and you can even just show that it has a win rate above 51%, would be amazing. Okay. I've done ones where I'm able to go through with order flow over 2 years and get 55%. That's the best that I've found. But show me something that has a positive equal risk reward, has a positive win rate. Pepsi Pop says order flow. Yeah, so that's the order flow is kind of what they call the kind of trading that I do. I don't like to use the word so much, because I just feel like that these definitions kind of mean whatever people want them to. That, like, marketers kind of use different words to sell something. Like, some people, they want to be associated with technical analysis, so they'll just call it. And other people don't want to be associated with technical analysis, even though what they're doing kind of is technical analysis. That's why I say that when you're talking about technical, like, edges based on information provided to you by the market, the search term is market microstructure. That's what I try and base my trading off of. And then I use my knowledge of market microstructure, and I use that to, and then I take the data that I'm getting from the order flow, and I use that to make my determinations about what's going on in the market. We just don't know anything. Well, you don't know anything until you've proven otherwise. like honestly, if 95% of day traders in futures lose money, why would you listen to anybody else day trading futures? And like all indicators, order flow is a lagging indicator. Yeah. I think that's true to an extent, yes. In that the instant that an order goes through and you see it, what you're seeing, that is something that just happened, but literally as soon as you see it happen, it is in the past. So is it lagging? I think that from that perspective, you could say that it is lagging, yes. This is where I'm saying, like, you know what's really the great thing is to just know what it's going to do. There you go. Much better to get your info right from the CME, like my buddy over there lets me know when they throw the switch. There you go. Listen, just know what they're going to do before they do it. That's really what it's about, is you want to know what they're going to do before they do it. And how do you do that? Because if it was based off of technical analysis, why wouldn't they have already done it? They can't look at the same signal that you do? No. But news can be a leading indicator. You can come in and you can say, oh yeah, they just made this change to this policy. That's going to force these certain players to have to realign. And the amount of money that they're going to have to realign is going to be really, really significant. And so I know that I can take a trade here because it's going to move and there's going to be way more volume than has already traded on this. That's predictive. News is a leading indicator. And I would say that the next best thing in terms of like its predictive quality that I've found is depth of market. Yeah, leading financial market is news, yeah. Like, remember back in June when we had that jobs report? We were all expecting the unemployment number to be negative because the last one was like the most negative print that we had ever had. And then it came out and it was positive and we bought it. And then the market moved up like 100 points afterwards. That was predictive. Depth of market, you mean not volume? No. Okay, so let me try and define things. When I say depth of market, I mean limit orders being moved around in the order book. So what you can see in the blue and red columns on my depth of market. That's what they mean. And HT had great numbers yet tanked. Great news. Well, you have to be able to do a complicated analysis on every situation. Sometimes the piece of information that matters isn't the piece of information that everybody sees right at the beginning. Sometimes people are already positioned for that piece of news. So like, here's a great example. Sumo Logic, I think probably a pretty similar situation to what you're talking about, Blunt, comes out. Sumo Logic is doing really well, buying up, and then the first earnings come out and they're really positive and the stock sells off that day. Well, why did it do that? Because the market already knew that the results were going to be good and they had already bought. And then once the news came out, it had already been factored in because their positions were already long. You want to wager your buck? I do it all the time, and I've made money doing it. And I've shown you guys in some of my videos the broker statements from at least 3 or 4 different instances where I traded on news. Those were like the biggest ones. Where I made money trading off of news. And I was able to explain exactly the analysis that you could use that would have helped you know what to do in that situation. Just because you aren't smart enough to figure out what the market is going to do based off of that news doesn't mean that you can't trade off of news. And if you want an example of people, I'm not going to say that I'm the greatest trader ever, right? Because I say I have really good times and I have really bad times. The times that I do really good are always when I have a really good handle on why the news is moving the market in a certain direction. But if you want somebody that's consistent that makes money off of a news, go and look at the Axia guys because they trade news all the time. May have a whole course on it and stuff. Check that. Well, I just said like I don't always win. Anyways, I think the issue that you have here is that you believe something, but you can't prove it. Right? You want to think that technical analysis works, But you know that if you were to look at your own performance, that it wouldn't be sufficient proof. And you know that if you were to look at your own back tests, they wouldn't be sufficient proof because you haven't actually been successful with it. I think that's the case with lots of people. And they say, well, yeah, but like one guy probably made money off of the technical analysis. And then it's like, well, yeah, but like in a Gaussian market, at least one person is going to make a ton of money off of it if they're just lucky, right? So then it really is just anecdotal evidence, isn't it? That's why I don't point to my own performance about whether or not something works or doesn't work, because I know that how I trade could change. How I'm performing could change. I might be doing really well now and I won't be doing well tomorrow. That's why I use the empirical evidence, a back test of performance of 8 years. The historical performance of something over 8 years. How does that perform? And then you say that, it's there and I don't get it. Well, we're going to look at this stocks and commodity article, but I'm going to laugh. It's not. It's not going to be what you think. And we can go and program it ourselves and see how it's performed since 2006. I mean, that was a long time ago. Very different markets. I'd be really surprised if an edge that they shared in 2006 still worked. I would be absolutely shocked. There might be something useful to it. But that's where, again, I say it's kind of like when you're using just price, it's like you can find statistical aberrations in it, but it's usually not enough to be profitable. Is there any free platform to watch the order flow of crypto and stocks? No, but I think that Bookmap is probably the best place to do it. Just accept that. Why? Why do you want me to accept something with no evidence? So what makes you think that I'm ever going to say, oh, Blunt? Do you realize we talk about Ace all the time? Do you realize how much shit I gave Ace at the beginning? It was like the first day I was like, well, you're full of shit. And then you know what he did? He showed me that day his broker statement. Like literally that, maybe it wasn't the first time, but like literally that week he showed me a broker statement, a whole month's worth of trading where he had made thousands of dollars. And that doesn't mean that he wins all the time. So I don't know if Ace's strategy really qualifies to break that test. I've back tested his strategy and my back test says that it doesn't. But he made good money off of it, right? And then you got some other jerk off comes in and says something and he doesn't show that. Why should I pay any attention to them? Right? You understand like how this works? You make a claim and then you provide empirical evidence to back up that claim. And if you're not willing to do that, then we don't give a shit what you're saying. So when I come in and I say stuff, then what am I saying? Well, one, I don't like to share stuff with you because I want to keep it to myself. But if you really want to know, you go and read studies about market microstructure, and then you'll see the mathematical and empirical evidence about the efficacy of those particular strategies. And might you be able to find something that might be applicable to retail trading? Maybe. Still freaking hard. I'd say probably you're still better off, you wouldn't want to ignore news while you're doing all that either, unless you had a ton of money. You had a ton of money, you could just martingale everything, right? Okay, time for me to go. I will see you guys tomorrow, and in the meantime, stay profitable, friends.